Okay, gentlemen, let's speak about Janet Yellen's legacy today. Let's take a tentative step into the twilight zone. We now know Scott Bessent will succeed her, but she remains the head of the Treasury, which means Yellen has authority until January. That implies imposing financial sanctions and assisting Biden in borrowing a large sum of money for the U.S. economy. And it's time to acknowledge how horrible things have gotten. And Yellen's first surprise was a $20 billion payment to Ukraine. The U.S. Treasury has moved $20 billion from blocked Russian assets. Could we remind everyone how awful this move is? It erodes faith in the Western banking system. The loan will now be paid for with windfall profits from Russian reserves, confirming a number of factors, including the fact that the West has reached its limit in terms of funding Ukraine. It is practically unlikely that Yellen is unaware of the consequences, the reaction, and the de-dollarization that this would cause. Trump has also signaled that he plans to slash funding in 2025. So Western economies are raising the alarms. The loan to Ukraine backed by Russia's assets reveals all we need to know. According to Janet Yellen, these funds, which are funded by windfall profits from Russia's own frozen assets, will offer Ukraine a needed infusion of support. There are two major issues with this strategy. By using Russian money to support the loan, Yellen will make things much more difficult for Trump in 2025. What if the Russians want their money back? And will the United States borrow money to reimburse the Kremlin? Second, Biden is seeking to erase $4.7 billion in debts to Ukraine, which is a weird decision that Congress will undoubtedly oppose. Ukraine is unlikely to be able to repay, so it will most likely come from Russia's blocked assets. Of course, Moscow is angry. The Russian Foreign Ministry's statement indicates the impending counter-seizure. Putin may take other Western assets on Russian soil, which they will utilize to boost industrial potential and conduct infrastructure projects in Russian areas. Despite popular belief, numerous Western corporations continue to maintain fixed assets worth hundreds of billions of dollars in Russia. Putin signed a decree in May that established a framework for seizing U.S. assets within Russia, and given what has already occurred, we may expect a major shock and a significant response in the future. However, we must proceed with prudence. Punishing Russia may appear to be a straightforward solution, but we are currently at a critical time in economic history. Trump is returning and bringing a trade war with him, which will result in higher tariffs and less international trade. The United States wants to reduce its deficit, and since 2020, it has been buying far more than it has exported to the rest of the globe. The trade imbalance has been increasing, which is a significant factor to consider. This indicates that cash from U.S. importers is moving out to other nations, such as China, India, the EU, and Mexico, and the contemporary economy requires a steady outflow of funds to function. Emerging markets use the reserve currency to purchase practically everything else, and the surplus money is kept as reserves. In September alone, the U.S. trade imbalance was $84.4 billion. In other words, the United States exported $84 billion in paper currency throughout the globe, with a large portion of that being recycled back into U.S. assets. Countries and corporations are pouring billions of dollars back into U.S. Treasury bonds, real estate, and, of course, the S&P 500. The larger the deficit, the brighter the outlook for U.S. asset values. However, this might reverse. If the deficit decreases and U.S. exports increase, the globe will be empty of dollars. The currency will also strengthen. When you throw in the expropriation of Russian assets, you've got a formula for disaster. The globe already has a dollar shortage, and if they invest in the U.S., would their money be confiscated? This is the major question. As you can see, this is a hard position. And don't forget that Saudi Arabia won the G7 in July over the Russian grabs. They may begin dumping EU debt holdings in response. This might be all bluster, but there is a clear and present risk. Global central banks aren't foolish. The perfect storm of asset seizures, along with Trump's trade war, might compel them to diversify away from Western assets. The supply of dollars might run out, and no one wants their money seized. So Yellen's legacy, her intention to censure Russia, will have a long-term impact on the U.S. economy. It will make it more difficult for Washington to raise funds, especially because China is already issuing its own dollar bonds. According to an EU report, the seizure is disastrous for the United States. Interest rates would rise by 90 basis points, or over 1%. After only 2 years, the exorbitant interest rate payments would surpass the value of the confiscated assets. And we have mentioned this many times before, and now the EU has validated our suspicions. It is not only worth it, it is not worth it. You will only hurt Western economies. Ultimately, you will pay more. The wealth confiscation was terrible enough, but let's head down this rabbit hole. In a weird twist, Yellen recently achieved the unimaginable. She genuinely apologized for failing to manage the United States budget imbalance, and now she's saying the deficit must be reduced due to increasing interest rates. Remember, this is the same individual who said that inflation was just temporary. And, shortly before the 2008 crash, she insisted everything was good and there would be no recession. And this is my particular favorite. Back in 2017, she stated that U.S. banks are substantially stronger and that another financial catastrophe is unlikely. We all know how the tale ended. Banks such as First Republic and SVB have crumbled like houses of cards. There were several bank collapses. Therefore, practically all of her forecasts were incorrect. However, her apology is highly hypocritical because she was not battling the deficit. She was adding to it. She was increasing the load on the national debt. This is far worse than the monetary sanctions against Russia. The larger the national debt, the closer the U.S. bond market and the economy as a whole are to default. We'll get to a stage when interest payments are the largest item in the budget. Let's take a look at some zero-hedge charts to quantify the madness. Now, only in October and November, the U.S. national deficit reached an astonishing $624 billion, the worst start to a year in U.S. history. It is a farce. It is a tragedy. Even the spending in 2020 was not so extravagant. And this is what happens when you support two wars, battle China's economy, deploy bases everywhere, and expand big government even more. When you start spending money like drunken sailors, things get much more funny. During Yellen's tenure, I do not believe the terms fiscal sustainability can be used here. During her supervision, the debt soared to the moon. During her tenure at the Federal Reserve, the debt increased by an astonishing $6.8 trillion. This was awful enough, but interest rates were much lower at the time. Just look at the time beginning in 2021, when she became Treasury Secretary. It's as if she has lost control of everything. Despite interest rates ranging from less than 1% to over 5%, she borrowed more than $8 trillion. Now this is insane. Overall, our closest buddy issued 42% of all U.S. debt ever sold. That is an increase in the money supply since the U.S. government spends it directly into the economy. Of course, Yellen would argue that the national debt is under control, but we must push her on this. The longer rates remain high, the larger and further out the interest payments will become. So Yellen mismanaged the debt, and Stanley Druckenmiller chastised her for it, that she committed the biggest mistake in history. Yellen should have borrowed more money in advance when interest rates were low, and with rates still much above 4% throughout the curve, the U.S. national debt is doomed. Every dollar borrowed is becoming extremely costly. Interest payments are a major concern because we know how much money will be borrowed. Whether it's the Biden administration or Trump's, the game plan remains the same. According to the CBO, the entire deficit will only increase, and predictions are currently extremely cautious. By 2034, the overall deficit would be 6.9%, with interest payments alone rising to an astonishing 4.1% of GDP, or 1/6 of total government spending. So it's just one giant doom loop. It grew far worse under Biden, and Trump is locked on a hamster wheel. So Trump is going to confront a slew of obstacles. He wants to boost U.S. industry, which entails a slew of tax breaks that would increase the national budget even further. And if Trump raises taxes on the rest of the globe and reduces imports into the United States, tax revenue will not rise. It may possibly remain flat or even decline. Tax breaks will also reduce government income. So the gap would have to be borrowed from the rest of the globe, and it is also important to examine the current economic condition. The dollarization is increasing. Thus, demand for U.S. bonds as reserve assets would continue to plummet. China's issue of dollar bonds competes with the U.S. for funds. In November, inflation rose by 2.7%. Inflation is sticky, which will cause the Federal Reserve to slow pace with rate decreases. In December, we only saw a 25-point drop. Worst-case scenario, the Fed may even suspend the rate cuts, putting the U.S. Treasury in an untenable predicament. How much more can they borrow? And make no mistake, Trump's proposal will be very expensive to implement, and this is the best-case scenario. By 2034, the Fed funds rate will be about 3%, representing the short-term borrowing rate. The interest expense on longer-dated bonds, such as 10-year bonds, would be significantly greater. The yield curve will normalize, but the 10-year yield will remain around 4% for the long run. How can he cut the deficit with that? He could dismiss government employees. Surely that is Elon Musk's intention. But is this even feasible? If all federal employees lost their jobs, consumer spending would increase. So you can see what's on show. Biden's 4 years were disastrous, and he delivered Trump a basket case. Even if the future White House wants to do the right thing, they will be unable to stop this train. The challenge is to find new creditors ready to lend money to the U.S. at a reasonable rate. And who owns the current mountain of U.S. debt? Domestic holders account for 79% of overall assets, which include the Fed, mutual funds, banks, pension funds, and individual investors. Only 21% is owned by foreigners. Trump must find a method to boost this proportion of debt holders, because if all of the debt is owned by local players, it will become a Japan-like situation. However, in the case of America, the yield will be pushed to rise above typical levels. Going protectionist will also make the case for keeping U.S. debt increasingly difficult. Now, I wish I could say there is a simple way out, but I don't see a situation that does not include great anguish. The only way to avert a default and uncontrolled inflation is to accept a recession now and cut expenditure. And maybe it's time to let the house of cards collapse and plunge us all into a recession. But tell me what you think. Is Yellen genuine here? Do you accept her apologizes? Please let me know in the comments below. Stay safe, like, and subscribe as we traverse these tumultuous times.